Hello traders, Gary Wagner here for Trending Markets. Just before 11 o'clock in Honolulu, 4 o'clock in New York. That means equities markets are coming to a close. They have been all over the board today. It looks like we will see Dow Jones Industrial Average settle up, currently up about 68 points at 16,405 with a low of 16,266. So as you can see, it has been under pressure negative for the better part of the day, but really popped up towards the end. Of course, gold, precious metals as a whole are just flying, and the dollar is under extreme pressure on the day. First, let's take a look at the S&Ps. S&Ps are trading in essence unchanged, currently trading off about half a point to a point and a quarter lower on the day at 1907.50. It is traded to a low of 1890 and a high of 1922, and that is a tremendous range on our daily chart. So traders, first chart that I do want to look at on today's show is the E-mini daily chart standard candlestick format. When we do that and we look at the current candle today, that of course is this doji that we're looking at right in here. You can see that without a question of a doubt that this market right now, as it currently stands, is in essence unchanged. You can see that because the open and the close are basically the same when we take a look at it. We can see that although it's had somewhat of a defined uptrend in the market, we've got some real serious resistance at around 1938. And the fact of the matter is we have a jobs report coming out tomorrow, and depending on what numbers come out, could really have a pretty dramatic influence in terms of the equities as well as the dollar and gold. So we're not going to put on any positions in the Standard & Poor's, not right before the jobs numbers come out, and we are sitting long quite a little bit of gold right now. So I believe that we are positioned in good shape in the market. But the real key to this market has absolutely, over the last couple of days, been the US dollar. And here is something that I find interesting when we look at the dollar, and we look at it in regards to also gold. If you take a look at this particular area in gold, this is our 200-day moving average, and we can see that we have broken clearly above that over the last trading, actually the last two trading days. Now we return to our dollar chart, and this of course is a daily dollar chart, but on this dollar chart I've got a 50-day as well as a 200-day moving average. And obviously the 50-day we crossed some time ago, but this is our long 200-day moving average. And as you can see, today's move has clearly broken the price point of the dollar index on a closing basis below the 200-day, moving average. And to me, that is absolutely significant, and it's something that we should pay a lot of attention to. Now, in terms of different critical areas that we really want to look out for, of course, we talked about the fact that we had real resistance up at around 100 in the dollar index. You can see that. That's based upon these tops. But the next real critical level doesn't come in until about 95.34, and that is a 23% retracement level of the move back in April and July last year, when the dollar index moved literally from 79 up to 100. And when we do that, of course, this is our first real point of contention. If we are going to find any support and the dollar continues under weakness, of course, this is the point that I would expect it to go to. So we've got some real potential on a technical basis also for the continuation of dollar. So traders, in terms of the currencies, I want to take a quick look at the euro dollar. Of course, we've got the dollar index here on the top, euro dollar index on the bottom. We've got both of these charts laid out. We talked about the fact that we could see some support come into the dollar index at about 96.35. Just about where we are at. We are closing just above that point, this being a shorter term study going from 93 on the bottom to 100 on the top, so a very, very short-term study. And then when we look at the euro, we've got the same type of areas from about 115 to 105. That's the length of the retracement itself. And when we do that, what we get is a level that is right in here. And this, of course, is a 75% retracement from this move down back to here, 75%. And so I currently see any kind of potential resistance that would come into the market in this area, support in this area. These are really, really minor levels. And considering the kind of pressure we've seen in the dollar, we definitely have something going on there. And we definitely could see this develop into more of a trend than really a 2 or 4 day price swing in the market. And so traders, lastly, I do want to take a quick look at crude oil. Crude oil is trading off about almost 2% on the day, 1.73%, 56 cents per barrel decline at 31.72. I do have one fib retracement, very, very short-term study again. This coming in just above 38, down to these recent lows at about 26. And when we put in this fib retracement, we see that we have a 61% retracement level, which sits in at 33.73, and that's where I'm pegging current resistance in the market. I still think that right now we have the opportunity to see oil drift lower when we consider the fact that we had this decline in price from 38 to 26, the fact that it would come up 61% and then begin to trade lower still fits in within a defined bear model. Maintain our gold positions. We're going to stay flat in trending markets, taking a serious look at the dollar and the euro dollar for next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.